Welcome to End of Day IFRS Spotlight with OJ Samuel. In this episode, we'll be dealing with the summarized anatomy of IFRS 18 titled Presentation and Disclosure in Financial Statements. IFRS 18 Presentation and Disclosure in Financial Statements was issued in April 2024. It will become mandatorily applicable from January 1, 2027. However, entities interested may earlier adopt this standard by applying it before the mandatory date of January 1, 2027. IFRS 18 Presentation and Disclosure in Financial Statements will supersede IAS 1 titled Presentation of Financial Statements. When IFRS 18 becomes mandatorily applicable or is applied by an entity, IAS 1 will no longer be applied. IFRS 18 will become the applicable standard with respect to presentation and disclosure in financial statements. What are some of the structure of IFRS 18? IFRS 18 has the core provision of the standard numbering from paragraph 1 to paragraph 132. There are 132 paragraphs under IFRS 18, and it has four appendices. Appendix A, Appendix B, Appendix C, and Appendix D. Appendix A deals with the defined terms. There are new terms associated with IFRS 18, like operating profit or loss, like profit before financing and income taxes, like profit, like management defined performance measure, like aggregation and disaggregation. All of these are some of the terms defined under Appendix A of IFRS 18. Appendix B deals with the expatiation or expansion of the provisions of the 132 paragraph contained in the standard. Appendix B explains further the provision of this standard and refers to other relevant provisions of IFRS Accounting Standards in expanding and opening up how the provisions of the paragraph of IFRS 18 will be applied. Appendix C deals with effective dates and transitional provisions. These provisions deal with how an entity transits from the period reporting under IAS 1 to the required reporting under IFRS 18. What happens with the restatement of line item? What happens with the retrospective application? What happened with the application of the provisions of IFRS 18 with respect to interim financial reporting? What happens to the amendment of line item under condensed financial statement under IAS 34 interim financial reporting? And it also provides the right of election for an entity to decide whether to reclassify its investment measured under the equity method accounting into financial asset measured at fair value under IFRS 9. These are some of the provisions of IFRS 18 under the Appendix C. Appendix D of IFRS 18 deals with the consequential amendments to all the other IFRS accounting standards by the virtue of introduction of IFRS 18. The standard most affected by the introduction or issuance of IFRS 18 is IAS 8. By the introduction of IFRS 18, or when IFRS 18 is applied by an entity, the version of IAS 8 required to be applied is titled Basis of Preparation of Financial Statements. In other words, IAS 8 has been retitled to be known as Basis of Preparation of Financial Statements. In the current IAS 8, the title is Accounting Policies, Changes in Accounting Estimates and Errors. But with the introduction of IFRS 18 and by the consequential retitling of IAS 8, the version of IAS 8 that will be applicable or that is applied together or alongside IFRS 18 is retitled Basis of Preparation of Financial Statements. In the new IAS 8, some of the provisions of IAS 1 were relocated to IAS 8. Provisions like the going concern consideration, like the disclosure of significant accounting policies, like the sources of estimation uncertainty, Another qualitative information contained under IS1 were located to IS8, titled Base of Preparation of Financial Statements. Also, with the introduction of IFRS 18, as has been said, the four appendices are Appendix A, Appendix B, Appendix C, and Appendix D, in addition to 102 paragraphs contained as the core provision of IFRS 18. IFRS 18 introduces new line item and new consideration in arranging income and expense on the face of the income statement. It's important to note that there is a change of name in the income statement. The income statement is known currently as statement of profit and loss and other comprehensive income, or statement of changes, or statement of comprehensive income. However, under IFRS 18, the nomenclature statements of comprehensive income is no longer in use. Rather, a nomenclature called statement presenting comprehensive income is used. When an entity is to refer to the profit or loss section, when an entity is to refer to the profit or loss section and the other comprehensive income section together. So the statement is no longer known as addressed as statement of comprehensive income. It is rather addressed as statements presenting comprehensive income, or alternatively, as statement of profit or loss and other comprehensive income. In addition, the arrangement of income and expense in the face of statements presenting comprehensive income, or the profit or loss section, to be specific, of that statement presenting comprehensive income, or statement of profit or loss, has been made in such a way there are 5 categorizations of income and expense. In other words, income and expense of an entity are categorized into 5 categories. We have the operating category, we have the investing category, we have the financing category, we have the income taxes category, and we have the discontinued operations category. These are the 5 categories of the presentation or classification of income and expenses in the face of statement of profit or loss, or the profit or loss section of the statement presenting comprehensive income. In addition, certain line items have been introduced that are mandatorily required to be disclosed in the face of the statement of profit or loss, or in the profit or loss section. They are operating profit or loss as a line item, profit before financing and income taxes, and just profits. The summation of the subtotal of profit or loss is referred to as either profit or loss. In summary, the mandatory items that must be seen that are new, profit has always been there, maybe called profit for the year or loss for the year. However, the 2 new line items that are mandatorily introduced as a subtotal that will be seen in the face of statement of profit or loss are operating profit or loss and profit before financing and income taxes. So in arranging the income and expense items in the face of profit or loss section, an entity begins with the income and expense that deals with the operating category. After the operating category, the profit subtotal arrived at is called operating profit or loss. From that point onward, the income and expense relating to investing category are presented. After the presentation, the summation of the operating profit or loss with the income and expense related to investing category gives rise to profit before financing and income taxes. Afterwards, the income and expense relating to the financing category are presented. And that will give rise, in the netting, that will give rise to the profit before income taxes. On the presentation of income taxes, the line item arrived at is profit after tax. That is, if there are other items to be considered, like profit or loss of discontinued operation, that line item is called profit after tax, and the profit or loss of discontinued operation is slated in. So the netting of the profit after tax and the profit or loss from discontinued operation give rise to profit or loss. Now let's take it back this way. If there's no discontinued operation and the income tax expense is deducted or adjusted for, That line item is just the profit. But when there's profit or loss from discontinued operation, after deducting income tax expense, the line item is not profit, it is not profit or loss from continuing operations. So that when the profit or loss from discontinued operation is added, the summation of both of them will give rise to profit or loss for the end of that section of profit or loss section. So these are some of the highlights or developments under IFRS 18. And also, there's a concept called management defined performance measures, and a disclosure required on this item called management defined performance measure. There are also issues about identifying the specified or main business activity of an entity. All of these are necessary in ascertaining which income and expense are to be categorized as in the operating category or in the investing category or in the financing category. There are a whole lot of provision, but these are just the core anatomy, the summarized anatomy of the content of IFRS 18 titled Presentation and Disclosure in Financial Statements. Thank you for joining us in this episode. We invite you to subscribe to our channel, like our videos, and share them widely. I invite your professional colleagues to join in subscribing, because there's a repository of video and content that they will enjoy by going through all the videos we have on our channel. Thank you once again for joining us for this episode. See you again in another episode. My name is OJ Samuel. Bye for now.